Welcome guys to my channel. It's Victor here and I'm back again with another video. As you can see from that is the topic right here, that is from avoiding FOMO to having a plan. 5 key ways to manage a crypto down cycle. Now basically this is talking about how to handle a market that is very shaky, like a market that is falling down. And we have the pointers here. This is all from Coinbase. Coinbase is it's a platform that you can use to trade, buy crypto and that kind of thing. So go ahead and check out Coinbase and play with it and see and just learn about stock. So I have these 5 pointers right here. Don't fall prey to FOMO and FUD. Number 2, set clear goals, diversify, and only trade within your means. Number 3, HODLing and long-term thinking. Number 4, be ready to ride out the dip or take profits. And number 5, see the opportunities. So basically now it's just talking, it's an article that is talking about the 5 strategies that you might want to follow during a market dip in order to hold on to the value in your portfolio. That is, avoid emotional trading and lose less sleep. When I read this, I was like, this is an article that most investors should read. I know most investors are familiar with it, but if you're just getting into the stock market, if you're a first timer, these are some of the things that you need to know. That I remember somebody told me not to ever put emotional money, and basically what that means is you can lose. There's a high chance of you losing everything. You may make $900 today. You may get into the market right now and make $900, and you may lose it tomorrow. It's very volatile. The market is very volatile. So number 1, don't fall prey to FOMO and FUD. What is FOMO? That is fear of losing out. And FUD is fear, uncertainty and doubt. So the whole thing of FOMO basically means you want to get into the market, like you want to get everything while everyone's getting it. You don't want to miss out. You're investing because the market currently is good. It's not supposed to be like that. If you have to get in, just get in. Don't have any attachment with the money that you're putting in. And if you're the kind of a person who's really emotional, this is not the best place to put in your money. The stock market is very volatile. Half of the time you'll end up being disappointed. So an FUD, that is fear, uncertainty and doubt. This is what it says. The article says that are common terms in the crypto space and can have a stronger influence on our choices to buy and sell than many of us would like to admit. Now, FUD generally refers to a negative market sentiment caused by some rumor, unfavorable news article, or prominent figure expressing concern about a particular market or asset. We've seen these, like we've experienced all these words in one case or the other in different scenarios, where you'll have a public figure will come out and say, or maybe a CEO of a certain company did something that will affect the company, and now that also affects the stock. That's what it means basically. Now, number 2, set clear goals, diversify and only trade within your means. Now, listen to this. The last thing anyone wants is to be caught in an emotional roller coaster, waiting for positive price action as the price of their portfolio slowly drops. You know, you get to that moment where you're like, oh, I hope you have fingers crossed. I hope maybe the stock that you're buying or crypto, whatever you're buying, will go up. And unfortunately, you end up being disappointed. What are some of the things you can do? Now, most savvy investors also choose to hold a number of different kind of assets long term to diversify their portfolio. Diversify. That is from alternate cryptocurrencies to stock market index funds. It's often said that crypto doesn't sleep. Cryptocurrency markets are well known for their volatility, and to counter these, crypto investors should predefine their trading strategies and, if possible, their entry and exit points. That makes sense. Even if you had access to every bit of information available, a sudden black swan event hack, or tweet from a high-profile individual could cause prices to plummet. And I've actually seen this when it comes to the NFTs, whereby people like there's so much hype about it, and some of them are very scammy. Just be very careful. And half of the time, they may use people who are prominent so that they can have people buy these NFTs. So this is why it's crucial to plan ahead and to take steps to mitigate your losses should some kind of sudden crash occur. We've seen these every now and then, like something is always crashing, and I bet right now things are crashing left, right, center. Investors could consider fixed strategies like dollar cost averaging, that is, the process of buying or selling small amounts over regular intervals, which could help a crypto buyer completely avoid trading with the emotions or having to stare at the charts 24/7. We've seen people stare at the charts like, it's like you're sitting on the edge of your chair, you're like, oh man, is it gonna crash? Just diversify. That's what I can say. Make sure buy, and the whole dollar cost averaging is a really, really good process. Because if one goes down, something else might go up. Diversify, diversify. Number three is hodling and long-term thinking. So let's say, for example, you want to buy a stock from, you want to buy a certain stock from a company, of a company. Just buy and just forget about it. Hold it long term, because usually they tend to say that buy something and just forget about it, then come back later. But what's the time frame? Like, yes, we talk about buying it and forgetting about it, but what is the time frame? Now, through the years, Bitcoin has consistently trended upwards over the long term. Now I'm answering this question. Even if prices are falling due to a temporary market correction or a longer bear market, history shows that prices are likely to recover eventually due to economic drivers like scarcity. Many people believe that this limited availability will cause the price of cryptocurrencies like Bitcoin to continue to rise over time. If your investing time frame is on the longer side, years instead of weeks or months, negative price movement can be viewed as being temporary. That's the thing. Like, don't buy something and expect it to like right now. Things, we've seen that Dow has gone down by a couple points. Now, if you decide to buy Dow, that is DOW, don't expect it to go up by next week. Just give it time. Give it like a year or two. It may do well within the next few months, but the longer the time, like in years, the better. There's a study that showed that if you buy stock and hold it for like maybe 5 years, there's chances are that you will have a stable, you'll have consistent income, I guess. I don't want to say too much about that because I'm still doing my research on that, but the longer you hold it, the better. So holding for long periods has to date been a proven strategy, with Bitcoin emerging as perhaps the most successful major asset of the last decade. That's what I was trying to explain, that hold it for long. Don't buy it and just maybe sell it within a couple weeks. Buy it right now and maybe come back maybe in 2 or 3 years time and take a look and see if it's gone up. But currently there's just a lot of instability going on. So right now, buying and selling, that depends on everyone, on each investor. Number four, be ready to ride out the dip or take profits. Now, I'll just read this and just listen to what this says. One of the safest options for avoiding crypto volatility and protecting yourself during a market dip is to convert some of your volatile crypto holdings for more stable assets. It's always been recommended that whenever a dip is going to happen or has happened, it's always good to have assets that are stable. You may sell the volatile stock and get the more stable stocks to balance it. Now, this can help an investor lock in their balance and reduce their risk and need to actively manage portfolio and stress levels in a crypto bull market. Now, stablecoins like USDC aim to maintain the value at a fixed price, and by converting part of your portfolio into stable value assets, you lower your exposure to price changes while the market are in a lull. and the market is sleeping basically. But also remember that selling everything at once, like I've seen some people do on YouTube, called capitulation, can easily cause crypto holders to lose out if the market suddenly rebounds. There's always that chance that, like, now for example, a couple weeks ago, there's a YouTuber who sold all his, like, went all in and sold everything. Then there was a speculation that the market went up, and I actually made a video about that. Stock market has gone up, but right now it's like, this week it's just been, I don't know what's been going on. Like everything has just gone down all at once when we least expect it. So this is why it's important to map out an idea on what level of profit and loss you would be comfortable with before you're forced to make decisions under pressure. And remember, many investors today choose to move in and out of stable assets as part of a larger withdrawal and buyback strategy, which can help gradually grow their portfolios if the timing is right. And again, it does mention for many investors, dollar cost averaging can be a good way to avoid even attempting to time the market. And I'm going to do another video on dollar cost averaging. So number 5, the last but not least, is see the opportunities. Even if there's like, a dip, always make sure to be positive. Look on the brighter side. It says that keen investors see a new window of opportunity to get their favorite assets at a discount and turn a profit. That is, buying the dip is a popular way for traders who felt priced out of previous gains to get into the market or increase their positions. That is, when everything is down, just go ahead and buy it, and and go back to number 2. Oh, sorry, number 3, and hold it for a long period of time. Now, even with a downtrend, there will be small peaks and valleys as the market fluctuates, like what we've seen in the past weeks. Traders that have brushed up on their technical analysis skills can stand to benefit here. Using that knowledge to predict these short-term movements and capitalize on them by buying the short-term lows and selling the highs. So yeah, this is pretty much, it talks about despite the market going down or like, dipping, there's always, people will still get some gains out of it. While others are losing, others are gaining. And while others are gaining, others are losing. Now, short selling or betting that an asset's value will fall can also be a good strategy to turn a profit during dips. Now, activities like staking and DeFi yield farming can further help level out returns and profit support to make sure your actual crypto balance is always growing, even in a bear market or downward trend. Now, if you believe an asset will eventually be worth more, dollar cost averaging works whether markets are up or down. In fact, you get more crypto for your dollar during down cycles. That's what I'm saying, that while still the trend is on the down, is trending downwards, you'll still make a profit. Now, there's another, remember, these kinds of activities, with the likely exception of DCA, are not for the faint of heart. Yes, again, emotional, don't attach your feelings to the stock market, and may actually result in significant losses, or at the very least greatly increase the amount of time you spend in front of a screen watching stressful price charts. When I read this article, I was like, this is what we need. Like, Coinbase couldn't have just given this at a better time, because this is what everyone, like right now, we all have our fingers crossed. Oh man, I hope I'm not going to lose out on these. I hope I'm not going to miss out on this. I think this is the best time to get in because the market is down, or because maybe the market will go up. So let me ask this. What do you think of the current situation? Is it the right time to buy or sell? Let me know in the comment section down below. Thank you guys for listening to me. Like this content. If you like this content, go ahead and give it a thumbs up, and don't forget to subscribe to my channel. And you guys have a good night. Bye bye.